Hey everyone, this is Terry with Futures.io, and as like always, I would want to thank you for joining us today. It is my pleasure to welcome back Rod Casilli from Collective2 for today's webinar on automation and strategy development for non-programmers. Now, please feel free to type your questions into the questions box throughout the webinar, and we'll do our best to answer them at the end of the event. If you're watching this on YouTube, please do us a favor and give us a thumbs up if you enjoy the webinar. And as always, please feel free to share, comment, and subscribe to the channel. It really helps us a lot. For trading news, events, and information, follow us on Facebook, YouTube, and Twitter using @Futures.io. And now, without further delay, I will hand it over to Rod, and you should get the pop-up to share your screen.
All right, yeah, thank you. Just one moment, we'll get it over here. There we go. And let me just take a look. All right, super. Well, thanks very much, Terry, and appreciate everyone taking the time, getting away from the screens for a moment. Terry and I were just talking before we get going. I know it's best practice with some of these webinars to try to make them evergreen. In other words, don't comment about what's happening in the markets and things like that, but it'd be hard to not do that this week and even today. So hopefully everyone's keeping their head above water. And I was also joking with Terry that I was going to talk about how, discretion versus automated trading. That's what we'll talk about today. But discretion is not a four-letter word. It's okay to make a decision today to just sort of walk away from the screens or turn off your strats. It's been kind of a challenging, very volatile market, as we all know. All right, everyone. Well, thanks again for taking the time to spend a little bit of time with me today. So again, my name is Rod Casilli. I'm the head of product at Collective2, but first and foremost, I've been a trader and investor and strategy developer for about 20 years, both doing that on myself and working with tools and partners. We'll talk about all that today. So again, thanks for joining, and let's go ahead and get started. So I wanted to start out with an important disclaimer just to remind everybody that the material presented today is for educational purposes only, and that nothing constitutes a buy recommendation to sell any security. So you're fully responsible for any investment decisions you make. And that all mention of hypothetical performance, statistics, order history, execution positions are hypothetical. Hypothetical or simulated performance results do have certain limitations. Then you probably also saw up there on the Futures.io, also, I'm not going to read the entire CFTC rule 4.41, but just be aware of some of the limitations of hypothetical performance. Okay, so who's the guy talking? So just really briefly, my name is Rod Casilli. I've been in the software and financial services business for about 25 years. I started my career as a regular old grunt in a bullpen at Merrill Lynch in the Beverly Hills office back in the early 90s. I moved on to our syndicate desk and traded options for a while. And then I left, I'm really going to show my age if anyone remembers the SOS Bandits, the small order execution system. In the mid 90s, I operated some offices of a company called Block Trading and was responsible for, I don't know if you'd call managing it, but being oversight of at times 200 or 300 traders on our floor, most that were just sort of pushing buttons like drunken monkeys trying to compete against the big market makers. But we all learned a lot during that period as well. During that time, I was a licensed and registered guy. I wasn't for a long time, but then recently I did go get Series 3. I'm not a CTA, but I am a Series 3 licensed guy. So a little bit about me. And then also I would consider myself certainly a retail trader by all stretch of the imagination. I trade my own account. I don't have access to PhDs. I'm not a PhD myself. Didn't go to an Ivy League school. Don't have some of the background that would allow me to work at some of these prestigious quant funds. So I'm a regular guy, hopefully like most everyone on this call, and that's a little bit about my background and who I am. Okay, so what we're going to talk about today is what I call IBTD, which is the place to sort of start if you're interested in taking your particular trading from discretionary, or often called chart-based point and click, to something that's a little bit more automated. Now, the purpose of the call today, or excuse me, of the presentation today, is not to pretend that in 15, 20 minutes, maybe half an hour, I'm going to really teach or train anyone on how to automate a strategy from start to finish. But what I hope I can do is give you some guidelines and background into what's worked for me personally, what I've seen, the journey for a number of other passionate, committed, discretionary traders, the path that they took to bringing more automation to their trading, and then ideally make a compelling case for some environments where you can test and deploy your strategies in ways in which you can show whether you want to commit your own capital or potentially sell your alpha or your edge to the outside world. So we're going to start with identify. We're going to talk about what is your edge. A lot of people don't know. You have to start there. Then we're going to get into how it can be built, some of the tools, platforms, and then coding. Coding is not always necessary, but there are times in which you may want to consider working with a developer, a programmer, someone who's technical to be able to turn parts of your idea and your edge into something that can be programmed. How to test both backward and forward, and then of course how to deploy, where you kind of actually put this into reality in terms of brokerage and execution. Okay, so the first identify that I often find that people aren't doing is you got to stick to the markets that pull the magic out of you and not the madness. So what do I mean by that? Well, I find very often, well, right now what I'm hearing all the time is, hey, what are the best strategies for automating Bitcoin? Well, as if Bitcoin in and of itself is, it's just a market, it's just blips on a chart, it's just tick data. There's nothing magical about Bitcoin or cryptocurrencies that make them any more or less appropriate to creating automated strategies around it. So what I'm going with this first identify is, I imagine that the audience we're talking to today, folks that are on Futures.io, big mics, and familiar with the futures markets, you already have something that you trade or something that you're drawn to. If we're going to stick in the futures markets, I mean, there's many contracts to choose from, and one of the problems that I have, and I hear very often, and I disagree with it strongly. We get to Q&A, you can fight me on this. Is I can't stand when I hear this. This indicator, this strategy works on any time frame in any market on any instrument. What? No, no, it doesn't. Every market, every stock is almost like a living being, in my opinion, without getting too hypothetical here, if you will. So, bottom line on this particular slide, we'll just leave it with, try to start with something that you already are affiliated with, you already trade, you have some screen time around it, and don't just trade the hottest thing or try to automate something that's not really part of your core or part of what you're doing in your own trading. The next thing in terms of identifying where to start is really that less is more. You've probably heard this before. If your chart has too many indicators on it, if there's too many decision or criteria before you're able to actually identify a signal or take a trade, that in and of itself is problematic. It's extremely problematic if you're going to try to turn that into something that's automated. Even if you're just trying to automate the initial entry signal, not all the money management and risk management and execution side of it. If you're just trying to come up with the original signal, there's no more true statement than less is more. So as we go through the presentation today, I'll talk a little bit more about that. But I think that another mistake that a lot of non-programmers or people that are trying to bring some sort of automation or coding to their trading ideas is that they start to write down what's involved, and if it's more than a few lines, honestly, or bigger than a sheet of paper, it's probably not something that's going to work out too well for, I hate this term, but your average retail trader to try to figure out how to automate that. Again, we have to know who we are, we have to stick to what we know, and again, my background's not the kind of guy that's going to work for Renaissance or Two Sigma or something like that, where I can have some really detailed logic that's part of my strategy. So my strategies are dirt simple. I'll show you a few of them as we go through the presentation. The next, in terms of identifying where to start, is that just like everything in life, there's really no free lunch in trying to automate your trading strategies or getting started. So I don't want to say that ideas are like a-holes or anything like that, but we all have observations that we make in the market, or wow, it looks like these are kind of correlated. It'd be interesting if I start here or I start there. Or you pop into TradeStation and you can just go crazy with the amount of back tests and things you can do. So again, everyone here comes from different backgrounds, has different amounts of time that they can actually spend in the marketplace, different amounts of time they can spend trading. But I would recommend that before you consider strongly trying to turn some of your trading ideas or your discretionary rules-based trading into a strategy, that you really be honest with yourself in terms of the amount of screen time that you have trading that instrument, working in that market, being being just intimately involved in what you're going to try to now automate. So I'm not here to try to discourage anybody, but again, I work with a lot of traders that they've been very non-committed to understanding the amount of time it takes to actually hone and be a profitable, consistent trader. And they're going to come and say, hey, I have this idea, I want to try to code this up, or I'm going to try to backtest this because I read some article on StockTwits or on Seeking Alpha about this. So again, this identify on this screen ties back to where we started, which was being true to yourself and trying to pull out that magic of why you trade, what markets you trade, why you're passionate about that particular instrument, whether it's the crude oil markets or whether it's foreign currency, or whether it's indices, or there happens to be stocks, or whether it's pure derivatives like options. It's going to be very difficult to come up and identify things that should be automated if you haven't put in the screen time just in trading those instruments manually to begin with. Okay, so the next thing, now it's moving on to build. So now we talked a little bit about how to potentially identify some areas to start. I'll get into more detail as we go through the talk. But the important thing, I think, is to be realistic about what actually can be automated. So if we stick to the futures markets, futures are actually very good candidates for automation. Again, I started trading the S&P Mini probably 15 to 20 years ago. I think we've all seen the developments that have happened in that market. It's gotten more and more and more algorithmic, more and more machines just battling machines. So automating in the futures markets and automating your strategy is probably something that you can build, and we'll talk about ways that you can do that today. So that's a good place to start. Let me tell you what's a little bit more challenging, again, mostly for us retail folks, is to try to automate or backtest or get accurate data for complicated option strategies. So again, I will make an assumption most folks here are looking at the futures market, so we'll concentrate there. But in case you happen to have dabbled in iron condors or multi-leg options or other types of option strategies, it is more difficult to automate those types of strategies. So again, for the audience today, probably good that we'll focus on the futures markets. And I'm not saying you can't actually build and automate options, but futures and equities, long short equities are better candidates for what you want to look at focusing on. Okay, and the next part of building is you're going to get what you measure. So what I mean by this is, you probably heard this term before, is that if you can't quantify for yourself, and then at some point potentially for an outside programmer or developer, if you can't quantify what you're trying to build, then it's going to be very, very difficult for you or anybody else to actually put that into bits and bytes and if-then statements that it can actually be automated, okay? So when we talk about measurements, this is probably cliche when it comes to automated strategy development, but I'm sure everyone has seen something like a simple moving crossover, right? When a faster moving average crosses above or below a slower moving average, that's a potential signal. And the nice thing about moving averages and many indicators is you can measure them, right? It's always measurable. So when you start to look at how you currently trade and what you do, and how that could potentially be turned into just the signal, the entry logic, make sure you are sure every step of the way that you can measure what you're looking to do. You can write down on a piece of paper if-then statements, which we'll talk about. If this condition occurs, then this condition occurs. If this condition occurs, then this condition occurs. We'll also talk a little bit about some of the drag and drop tools that are out there. Some are good, some are not so good. It's been interesting in that marketplace. It's taken, many have tried. There's been a lot of VC money thrown at these drag and drop, WYSIWYG kind of editors that allow you to put some conditional logic and then spit out some sort of code on the back end. But what I find very often is that while they're fine tools and things, they're basically ultimately something that really a programmer should probably kind of use. It's just a front end to spit out the code, as opposed to tools that are easy enough for regular folks to kind of work with. So anyway, bottom line, you're going to have to make sure that you can always have measurements for what you're trying to do if you're looking to automate anything. So in terms of what you start with, you do start with this if-then statement is the key to starting this process. So you've probably heard this before in the past, and it ties into what I mentioned before about starting with simplicity. I would say that your first attempt at trying to automate anything starts with no more than 1 or 2 conditional statements. So if I see this condition in the market, this measurable occurrence occurs, then we take action based on that particular input and output. So it's really, I don't want to oversimplify it, but it's actually quite simple. It's just that simple. And as we go through, we'll talk a little bit about NinjaTrader. We can talk about TradeStation. We can talk about Prodigio from TD Ameritrade. Most of those start with this kind of if-then conditional logic in some of the more approachable tools that they provide for doing this. So if you can begin to get your head around that, it's a good exercise actually to do, just to understand on the ideas or the thoughts or the approaches that you have or what you currently do where those signals are generated, how much of that you can translate into this kind of if-then logic. I should say, as just an aside here, since we have the word build up there, this is a perfect example also, I think, of the classic build versus buy scenario. There are definitely times in life where it makes a lot more sense to buy something than build it. Depends on what it is, depends on your skill set and your ability to do that. I would say in automating trading, you want to build what's going to work for you. So remember, you're trying to extract the magic from you that translates to the markets. It's very, very difficult to take a strategy or an EA or go into a trade room and watch somebody else do something and then internalize that and turn it into something that you can actually yourself or through writing up a specification for a programmer can translate into something that will work for you. So this idea of going through this if-then logic, it should really be applied to if-then in terms of how you approach the markets and what you're doing. Now, if you've modified that or if you've internalized and developed something that you use that's based on other ideas, that's what humanity is all about, right? It's just building on the work of others. But buying some sort of strategy from the dozens and dozens and dozens and dozens of vendors that sell out-of-the-box strategies and then trying to use that as the baseline for building your entire own strategy is probably something that you're going to find to be a little bit problematic. Okay, let's get in now to levels of automation. So this is actually borrowed from a partner and mentor that I work with for quite a while named Todd Brown. He's been in the market for quite a while, and he really brought this concept of levels of automation to me, and I've begun to really kind of adopt them and work with a number of traders on this journey and path where you don't have to go from discretionary point and click and miraculously somehow give that logic to a developer to develop, or teach yourself how to code, or use a drag and drop tool that will spit it out and think there's no middle ground. There certainly is middle ground, and these are these 3 levels of automation. So the first level is what we call level 1, and this is simply setting up alerts and conditions, programmatic alerts and conditions that tell you when your trading strategy is generating an entry, generating a signal. So this is pretty straightforward stuff, right? I think almost everyone on this call probably has some experience with some platform at some broker where you can set up alerts and conditions. The simplest alert that exists out there that's been around forever is what? It's a price alert, right? So notify me when price hits this particular level. And then a little ding happens on your desktop, or you get sent an SMS text note message or something like that. You'd actually be surprised how many people that are having a go at trading don't even really have a very, very detailed alerts and conditions or watch list that they work off of. They may sometimes do it, but they don't have it set all the time. So they don't have some sort of logic that is built into their platform that's going to give these alerts and conditions. If you already have it, that's great. If not, the first place to start, you can do this on just about any platform out there, is to just pick some type of level, some type of indicator, doesn't matter what it is. Throw some Bollinger Bands on there, and then any of these software platforms can easily tell you when price has gone above or beyond a particular Bollinger Band level. Or rip through some charts one particular night and look at 15, 20 symbols, whatever they happen to be, and just set up some conditional alerts for when all of those instruments or symbols hit their 50, 150, and 200-day moving average. Just as simple as it is to just get that in there. And see if you can first build something that will tell you when that instrument hits its 50-day moving average. And then you can overlay that on top of that particular trading platform. I think, since this was a crazy, crazy day, that I have some of these slides where we can get to it. If not, I'll spend like 5 minutes. Terry, remind me if I don't get to this. We can just jump on TrainingView, and I'll just show you how you can do that on the PineScript editor, or how you can just do that pretty quickly if we have time. If not, I'll at least show you. I think everyone here has probably heard of TrainingView. It's free for most of the stuff. They have a really nice PineScript editor. They have a good filtering tool. It's a good way to set up these initial alerts and conditions. But of course, your mileage may vary, and these are available as pretty simple tools on almost every platform out there. Okay, level 2 in the journey of building an automated trading program is the logic and entry. So if level 1 is simply setting up alerts and conditions and being notified when certain events happen in the market on the instruments and time frames that you've put into your screen or your filter, the next is coming up with actually the logic and entry and allowing a piece of software. By the way, I have a pet peeve. Please do not call what you're building, if you build anything, a trading robot. Oh, I can't stand that. There's some pretty popular guys out there that use that term robot. First of all, there's many reasons it's not a robot. A robot exists in the physical world and actually moves and does something. It builds a car, it launches a rocket into space. It's a piece of mechanical, tangible engineering. What we're talking about today is algorithmic trading. It's software, okay? It's not a robot. So anyhow, what you're looking for your algorithm or automated trading program to do is to come up with your logic, and then when the logic, the if-then statement is true, you're going to get an entry. And on a lot of prop desks, what they do is, as a training mechanism, they will actually create a number of different level 2 automation programs that will put their traders in a position and then see how that trader chooses to manage that position. So one of the things that we hear a lot about, discretionary versus automated trading is that your emotions get involved and yada, yada, yada. But there's two sides to every trade, right? There's the entry and then there's the exit. So level 2 is actually starting with just the entry logic, figuring out when a signal should be executed, and then having your automation actually enter that for you. Now you could say, well, Rod, if I put a ATM or some sort of stop and target associated with that entry, am I now 100% fully automated? And we'll move to level 3 in just a moment. Yeah, the answer is it sort of depends. But I would argue that on this level 2, the best place to start is to get the logic down and then get that entry signal down. And from there, you're well ahead of the game if you do that, because guess the first thing that doesn't happen is you never miss a trade. If your strategy is running and it has the right logic and entry, you're going to be in every trade you need to be in. Now the next thing is how we actually get to the perfect full level of automation, which is level 3, full automation. And again, just to go back real quick, don't go to level 2 until you've already set up level 3, level 1. You've had level 1 running. You've identified what you want to do. You've come up with some if-then statements where you can put together alerts and conditions. And at that point, once you have the alerts and conditions running for a while, you can move on to level 2, where you look to take those alerts and conditions and turn them into logic and entry. Again, not to belabor the point, I'm making some assumptions here. I hope I'm not the ass of the assumptions, but if you spent much time in the market on any of the large platforms, whether it's NinjaTrader in the future markets or TradeStation or E-Trade or Thinkorswim, they all have conditional orders that can be based on alerts. And if you set up conditional orders, you've actually moved from level 1 to level 2. You have a conditional alert. That alert actually triggers an order, and then you can have trade management on the order if you'd like, and that's what gets you to full automation, which is level 3. So level 3 is when you've automated the entire process. And the starting point of level 3, as I mentioned before, can be something as simple as having very simple associated OCOs or stops and targets with every signal that's entered. Now you can get fancy on some platforms, of course. You can build in logic that's going to chase or has multiple targets or multiple stops or uses some sort of volatility measure or other measure in which to determine where those stops and targets should be. That's all fine, but you can start with just a very simple signal-based per signal stop and target. And at that point, if you have all 3 of those things in place, then at that point you have created your first fully automated trading strategy that is using the idea that you created, the logic and entry, and then the associated risk management associated with that position. Now, the next stage of level 3, of course, is things like dynamic sizing and other stuff like that, but that's probably not what we're going to get into today. So those are the very 3 first levels of building. Okay, so now let's look at a tool that I've actually used for quite a while. By the way, I don't have any affiliation or direct association. I don't get any compensation for any of the companies and tools and platforms and things I'm going to mention today. If I use it and show it, it means implicitly that I like it, so I won't show you anything that I don't like. But again, there's no compensation or anything for any of this. So this, what you're looking right now is a template from a product that's been around for a while called Bloodhound. I think that if you've been on any other Futures IO presentations in the past, I'm sure they've presented. It's from a company called Shark Indicators. And it gives you the ability to, in sort of a Visio drag and drop way, you can actually create logic associated with your trading strategy and then instantly deploy that as a strategy on NinjaTrader. So this is something that I've used in the past. I used it mostly as a prototyping tool, and then I did choose to have some developers add some additional code that might not have been available directly within the tool. But they've made so many advances in the recent past that I'm pretty sure you can extend this. They now have an order execution engine called Raven as well. So when you get to the build step, after you've got your alerts and conditions, after you have the ideas that you want to begin to automate, looking at this particular tool is a good place to start. Again, it's called, I have it at the end of the presentation. And to this day, I still prototype ideas. The reason I have this one up here is because this is a strategy that I run every single day in the marketplace. It uses a proprietary bar, which is a modified Renko bar, but those bars are out there at a variety of different environments now. And it's a simple price reversal kind of concept. And this entire diagram that you see here is the entire strategy with an ATM applied to it. So when I was talking about the simplicity of what it takes to actually get something out there, it doesn't have to get much more complicated than this. There's a price reversal output, there's a indicator comparison output, there's a single indicator that's involved in the strategy, there's a particular look back period, and then the output gives you the signal. And that's it. And this concept was something that, again, after a lot of screen time and after beginning to understand the ideal tick increment for the particular instrument that I was using. Remember, I had mentioned before that I'm not such a big fan of the blanket statement that indicators or strategies work on multiple time frames and multiple instruments all equally. What I began to find was with the bar that I was using, the tick increment made a big difference depending on volatility and depending on the instrument itself. So with the crude oil markets or with gold, I would use a larger bar and a larger tick increment. And with things like the S&P and the NASDAQ, I would use a smaller bar with a single tick increment. And then based on that, that's going to determine where my price reversals occur. The one thing I did do is apply a consistent filter across all of the various instruments. So I was always using the same filter. So again, Shark Indicators, Bloodhound, if you haven't heard of it, and if you're a futures trader, and especially if you use Ninja, it's a good combination. It's a good tool that you should be aware of. Here's a little bit about what it looks like just on NinjaTrader. And again, I'm one of these dinosaurs that hasn't moved to Ninja 8 yet. I don't know if I will. I'm kind of moving away from working with the platform at all, but if you have spent any time on NinjaTrader, you're probably aware there's this strategy builder, and I choose to always start and run my strategies directly from the strategy, not from the chart. So the charts all run in the background. That way I can actually manage all the strategies directly in the strategy interface. These are the inputs and parameters that go into my particular strategy. It's extremely simple, as you can see here. All these things are set to false, so I only enter the position, for this strategy, I do enter when flat. I have a simple, 1-to-1 risk-reward ratio here on profit, target, and stop. Again, this is a proprietary bar that I named the Brickwick bars. There's actually still a bunch of firms out there that are selling this particular bar. It's known as Supreme Ranko and a bunch of other things. I load 7 days of data, and then I run it against this particular live account. So the exact logic that I showed you on the previous chart is the same logic that I apply to all these various markets, the only different being the tick increment, but the logic is exactly the same. And then, as I joked when we started the presentation today, I would say the only discretion that I use is I look at market conditions and make a decision as to whether the strategy should run or not run. It's about all I can do. Since there's so few inputs and the strategy is so simple, I don't really do much recalibration or adjustments. I make a determination as to whether the market regime is appropriate for a reversal-based strategy. And if it is, then I'll let it run for a period of time. If not, I don't. So the only discretion I have is on or off. I'm just not smart enough to know how to go in and recalibrate or say, hey, given the current market conditions, what I'm going to do is take my tick increment or when a new bar actually prints and take that up by 2 ticks to accommodate for the particular volatility. The only discretion I use, again, is whether it should be on or off. Okay, now let's get to the T for testing. So we did identify, we did build, and now we're on test. I think the last presentation I gave was, I got into a contentious thing on the questions and answers about saying that backtesting was nonsense and why not use backtesting. So let me redefine my position on backtesting. I think that backtesting is fine. It's a great place to start. If you are fortunate enough to have the time to put in a decent amount of screen time and have traded a particular instrument or market or environment for long enough, that of course depends on the amount of time you've put in, the amount of trades you've done, those types of things. If you're fortunate enough to start in an area that you're more familiar with, I would argue that the value of backtesting, given those parameters, is not as important. Meaning that if you approach this the way a lot of programmers do, they're going to try to let the software and the backtesting engine do a lot of the work for them. Like, I don't know what a good idea is. Let me just try to spit all this stuff out, and then I'll start with the best candidates from these tons and tons and tons of backtests. I would argue that you can kind of avoid that. Again, depends on your situation, depends on your ideas, depends on whether you already have something in mind that you want to begin to set up for conditions, trade entry, and logic. But I'm just a huge fan of walk-forward testing. And walk-forward testing means that you actually hook the thing up and you let it run and you watch how it participates in the current market going forward. Well, that was weird. There's a cop pulling someone out right outside my townhouse. So hopefully he's a good guy. No shootout going on. So walk-forward is where you want to get to as fast as you can. What you want to try to avoid when it comes to backtesting is firing up TradeStation and then putting in a couple ideas, if you will, or a couple, let's do the moving crossover strategy. Let's do a correlation strategy between gold and silver. Let's do a few other things and let it run tons and tons of backtest. And then I'm going to cherry pick the most interesting looking backtest. And from there, then I'm going to go and decide that those are my candidates. It's not a great idea, but don't spend too much time doing that. If you already have an idea of stuff that's working for you in a non-automated way, just go ahead and automate it and start letting it work for you in an automated way on a go-forward basis. So I can belabor that point enough. So now, quick pitch for Collective2 if you're not familiar with it. Collective2 is a online platform that connects mostly retail investors with top performing, mostly independent retail traders. That's what the business model is, but really what it is it's one of many environments that you might want to consider and look at to actually get a no bullshit walk forward test of your automated trading strategy in a way that you can't really walk away from publicly. Now you can cancel the strategy that you're running on Collective2. You don't have to make it public if you're doing testing, all those types of things. But really it's an engine in which you can submit trades, build a portfolio, and see how your portfolio, how your strategy works. Now you might say, oh, I could just do that in a demo account on Ninja. That's true. But what you'll find is that if it's not public, if you're not paying for it, you'll just reset your sim account. You'll just start over. You do that and that, this, that, and other. That's really no different than sort of this hybrid between back testing and just really rapid walk forward testing that you're not really committed to. Because what I find is, not what I find, this is just statistics and it's true, you have to run your strategy for a while on a walk forward basis. And for a while, I don't mean 1 day or 1 week or even 1 month. I mean 3 months, 6 months, through a lot of different market conditions, through different regimes. I mean, we saw a lot of people that were doing pretty well as trend followers in the course of the last year. Some people in January probably made their entire month, and unfortunately, many people may have given it back. So again, if you're not familiar with Collective2, you can go to Collective2, hit the join, and sign up for a free 14-day trial where you can publish your trades to the platform, get a sense of how it works, and if it's something that you think might be an environment that you'd want to work with, it's a perfect way to keep you honest in a walk-forward testing environment, so that when you have your automation, you're able to automate it. To put it in a walk-forward environment. On Collective2, we have a radio podcast that we call Collective2 Top Trader Radio. I'll give you. Let me just pop it over here. You go to collective2.com and under Top Trader Podcast, here it is. So I actually hand select from the Collective2 marketplace traders to interview, and I have a couple different criteria that I use. The first is that the trader has to be fully automated, so it has to be completely automated. Now, I don't show up at their house and look at their computer or share their IP. I trust them, and I look at their strategy, and I'm able to kind of determine whether it looks like it's under something that is automated. But for the most part, I take their word for it. So these are traders that have built completely automated trading strategies. It's an interview format with our guests, about 20 to 25 minutes long, and very often they'll walk through the same scenario that I've just talked about today, how they got to the idea behind their strategy, how they coded it up, or how they got it running. So it's a good resource. Obviously, this is the commercial part of the presentation here, but then there's a lot of podcasts on trading and on investing. I think what's unique about the C2 one is that if you're listening to James, or if you're listening to Danny Merkel or David Stevens or Richard Metzger, you can go right over to Collective2 and actually see their trading strategy in action. So they kind of back it up. So that's the first component, is I select them and I have to be automated. The second component is they have to trade live capital. So they're beyond walk forward. I mean, they might have walked forward with paper money for a while on C2 or somewhere else, but by the time they're on our podcast and they're publishing to Collective2, these are retail traders, people like you and me that you've never heard of, that are producing a public walk forward, fully automated track record that is also using live capital, and that's their own live capital. So it's coming from Interactive Brokers or NinjaTrader or dozens of the FCMs that we work with. Why is that important? Because now if you're listening to them and their journey and how they did it, I think it just adds a lot more credence that they're putting their money where their mouth is, quite literally. And then the final component, and I don't mean this to discourage anybody, because the title of this presentation was strategy development for non-programmers, most of these guys are pretty technical, right? So I cheated a little bit. I'm trying to think of one that didn't start with a technical background, meaning that I think to a man, most of these guys are, no, actually not all of them. I know James he's a software engineer. Dave Steffens is a software engineer. Richard Metzger is a software engineer. Also, Brad Pappas is he's a portfolio manager. So it doesn't come from a technical background. So, but for the most part, they do have technical chops as well. Okay. What happened? That slide didn't work. What are we seeing over there? We're seeing that.
It's still on the C2 homepage.
Yeah, it's still on it. Oh, that's why. That's why. Hold on. I got to do this. There we go. Oh, cool. Okay. So just really quickly, how you can manage a strategy on Collective2. I should also point out that you, of course, can do the trading that you do today. You could start with level 1. You could have an if-then condition, a conditional alert that's set on your platform, and when you get an entry signal, you can come over to C2 Quick Trade, and you could enter it. You can enter it right there. There's no shame in that. I would call that rules-based discretionary trading, which is certainly level 1 of automation. So that's how it can be done right on C2 Quick Trade. And again, not to belabor the point, but the benefit of that, whether you publish it or not, it's a real good way of keeping yourself honest. I haven't done a co-presentation, I think, with Futures.io on TopStep, but I know that TopStep Trader does a lot of stuff with you guys, Terry. They're also another great environment in which you can test your trading strategies. Now, I think that a vast majority of traders in their prop firm, which they call the Combine, I think, are probably more discretionary. There's nothing wrong with that, but you can, for a long time, just for shits and giggles and testing, connected combines to my trading strategies on NT7 and kind of let them run in a no risk environment, right? You're just paying the couple $100 a month, which is not insignificant, but that couple $100 a month does a bunch of things for you. It keeps you real honest with, you're not gonna just throw $200 away on things that are just blowing up accounts left and right, right? So if that's the case, then that strategy hasn't been properly back tested, hasn't been properly forward tested, or if you're forward testing it for a while and it has those characteristics, just move on. So C2 has that capability. TopStep Trader has that capability. If you're a little more technical, there's some quantitative finance platforms, which I'll talk about in just a moment. But sticking with C2, you have the quick trade. We have something called broker transmit. So if you have a live account at pretty much every FCM out there that uses Rhythmic or CQG, you could submit signals from your trading strategy directly to the platform using broker transmit. If you wanted to do that walk forward in a non-live account, you could also do what's called platform transmit, which is you could use a connector to something like TradeStation or NinjaTrader or MT4. NinjaTrader actually overlaps in the two things. You can submit signals from a live account or from a SIM account. That's really your choice. And then we do offer developer APIs, our own proprietary language. And while I would call this sort of swivel chair automation, we have email transmit as well. So if you started with a level 1 strategy, which is an alert and condition that fires off a signal to you on your platform, and you just translate that yourself initially into an email in a particular format, then you can send that email directly to Collective2 and we'll capture that trade for you in real time based on the instructions in that particular email. So again, there's no badge of honor or reward here for biting this all off at the same time and making it fully automated and all sexy, and there's nothing wrong with receiving an alert and using that alert to construct an email, and then from that email sending that off to a platform like Collective2 so that you're capturing it in a walk forward, out of sample, real, accountable kind of way. Because here's the last thing on the back testing versus forward testing and versus using platforms and paying someone like TopStep Trader, paying someone like Collective2, even before you have any return of any kind from those environments. On C2 it would be getting subscribers, on TopStep Trader it would be getting funded. Even when you're in that developmental stage, there's benefit to it versus saying that you can do that on your own by just putting it into a spreadsheet or into a paper account that you have in another broker. you got to trust me, folks. Again, I don't care if you work with us or TopStep or the 4 or 5 other companies I'll tell you about. I'd highly suggest, if you're serious about this, you choose one, because without that, you just it's human nature, just won't do it. You'll walk away from that trade. Oh, I wouldn't have done that, or you'll reset your sim account, or you do all this crap that just completely invalidates your strategy, invalidates the walk forward test. So it's really, really important to choose a third-party validated platform where you have at least some accountability and some cost associated with resetting or trying something else. Hopefully that makes sense. Okay, let me get to resources here. I promised I'd share some of these with you. And before I do that, let me just let me come over to TrainingView. I said I would do this. Let me see if it logs. Okay, good. Okay, so I probably won't. What's our time? We're running a little long, so I'm going to shut up here in a second. We'll get to Q&A. If you're not familiar with TrainingView, it's TrainingView. It's a really nice HTML5 charting platform. If you come over here, what I've done in the recent past is I've coded up some. I don't know why. Of course, when I try to do a test, I don't know why the strategy is not running here. Hold on a second, it should be printing. I know it's aftermarket, but, oh, there we go. Okay, so it's on this time frame. Okay, so there's a thing they have here called the PineScript editor, and this would be something that you'd have to be a programmer to work with. However, unlike NinjaTrader, which is generally someone that's more versed in C# and things, although there's other ways to code in Ninja as well, but with the Pine editor, it's very VB script based. So I've been able to find developers that actually aren't even all that knowledgeable about trading, and for very, very little money, I can get them to come in here and code up some PineScript logic. So for instance, I have, let me see here, where is it? I should have prepared this a little bit more. Trying to figure out where. Oh, new. Okay, blank. No, I want to open. Sorry, there we go. Open. Okay, so here's a number of different scripts and logic. Some of them are indicators. Some of them are full-on strategies that I can apply to the chart and generate a signal. So this is what I would call just sort of level 1, more sophisticated alerts, notifications. So you can actually see here that I'm plotting on the chart my ET cell right at that particular level. Here's a buy down here, so you can see that this signal right here, of course, not a winner. This one down here, beautiful winner. So pick pretty much the exact bar low in gold. And I honestly, in this strategy, the turning point sell is actually the exit from the long. So if you actually took that one short, you'd be a loser, but it's a nice exit point there. So it's a Pine editor, it's VB scripting, it's over on TradingView, and these entire, I don't know, whatever, each one of these were coded up for about $200. $200, and it was a developer that we actually found through, believe it or not, through a company called Fiverr, which is mostly people that do non-related work like build websites and things like that. So we had someone from Fiverr code some of those up for us. Okay, so let's go back to presentation for a moment, and I wanted to get into a couple resources. I'll just go through very, very briefly. If there's requests for it, I'm happy to share this last slide in the presentation. I don't think a bunch of the others are that interesting to people. They're mostly talking points, but if you're interested in these, I could take a snapshot or I can get them to Terry to make sure that you're aware of them. So the first is called Algo Terminal. Algo Terminal, full disclosure, is a company that I do some advisory work with. You can go to algoterminal.com and find out if this is something that's right for you. It's similar to TradingView in the sense that you are going to have someone that has a little bit of understanding about scripting, but it's a very rapid way to deploy and test, back test, and forward test trading strategies, and it's a more obscure platform that many folks haven't heard of. There's a tool on TD Ameritrade called Prodigio, which is more of sort of a drag and drop builder that you might want to take a look at. We just talked about TrainingView. I talked today about Shark Indicators, which is an extension or plugin to Ninja. There's two companies, one called QuantCast and one called QuantInsti, I guess is the way you pronounce it. These are companies that offer training and education around getting into quantitative and algorithmic trading. QuantInsti, I believe, is more, I think they're actually based in India or something like that, so they might be a little less approachable, but certainly worthwhile checking out. And then QuantCast has some really good training education materials. All of these people, of course, are trying to sell you something. I'm not trying to sell you on them. I'm just saying that I've worked with some of these companies in the past, and again, like I said, if I'm showing on the screen here, it's somebody that I at least think is worth checking out. I think the mother of everybody in terms of easy language is TradeStation. So I think everyone's probably heard of TradeStation. They have a their own scripting language that's called Easy Language. It's very, very popular. There's a ton of developers out there that can work within Easy Language. And Easy Language has some portability. It's certainly not as portable as the code that you could have developed on Algo Terminal, but TradeStation is certainly something to be aware of. It's a company called Streak AI that's doing some interesting things, a very small company. If you're getting more sophisticated and you get into the area, what I find is there's a lot of retail traders that are just using the data feeds. Let me punch this up. The data feeds and stuff that are provided by their brokers, which is fine for most of us. But if you get pretty serious about it, just realize that they're, and by the way, this is not because we're going to turn into some sort of HFT futures traders and try to compete with the big boys. But if you do get kind of serious about it, just know that there is a lot of other data sources for futures data and for all kinds of data. And if you want to, if speed is an important component of your strategy and low latency, then companies like Born are certainly ones that you should be aware of. And then finally is the Algorithmic Traders Association. So this is this ATASSN. So I think they offer these certification programs. I haven't gone through any of them, but they have some very interesting ways in which you can get a quote on having a strategy turned into something that's automated for you. I haven't ever worked with them directly or any of the developers or designers that they have in their network, but I've heard pretty good things about what they spit out. So I can't speak specifically to the costs, but it's somebody to be aware of. Let me click on QuantCast now since I know this is working. So here's QuantCast, and you can see that they have. Sorry, that's the wrong company. I'll fix this. That's the wrong company. Okay, I think I'll leave it there for now. If there's any questions, let's open it up. Oh, one last thing is we created a promo code for Collective2. If anytime in the next 30 days you were doing anything on Collective2 and you wanted to publish a live trading strategy or even found a trading strategy that you were interested in potentially following yourself, the flip side of the coin there, that promo code FuturesIO is good for $100 off. So that would be basically your first couple months subscription to a publishing plan, or that would even cover this strategy subscription cost if you found a strategy that you like. Most of them are around $100. So that's the promo code there, FuturesIO. Also, I love talking to traders and interacting with people. Good, bad, or indifferent, shoot me an email at rod@collective2, and I'd be happy to share with you. I kind of screwed up and I didn't have a survey in the beginning because I didn't tell Terry ahead of time. So as a result, I wasn't able to kind of ask the audience sort of where you are in the learning curve on this. So I kept it pretty high level. All right, that's it. Terry, we got any questions?
Okay, yeah, we have a couple. What is your recommendation for historical years to backtest the strategy?
What is how many years to historically backtest?
Yes.
Well, I think it depends on It depends on the strategy. Again, if you start with something like futures data or stock data that's pretty accessible, or even Forex data, that's a good place to start. Don't do something with options as an example, because that's a little bit more challenging. I don't know if it's amount of years. I think you want to make sure that you're capturing your in-sample stuff is at least capturing some various different market conditions. I think if you've been around the markets for a while, you can pick and choose the times that would be appropriate for that, but just running something all the way back to 1998 or something, which I see very often, is probably not as effective as creating some in-sample tests against particular times in which you think your strategy might be under stress. So if it's a trend following strategy and you would define it as a trend following strategy, by the way, we didn't discuss that. I think your idea generation stuff really does have to meet the elevator test. I think if you're not familiar with that, that's the whole venture capital pitch, where you're in the elevator with the guy or gal that you want to try to convince to invest in your company, and you just have an elevator's ride worth of time to convince them. Think of that the same way with your strategy. If you can't describe it in 30 seconds or less, you probably don't want to code it up. You probably don't want to backtest it. So if it's a mean reversion strategy, or it's a trend following strategy on the S&P 500, make sure that you are looking at the various in-sample times in which you know that strategy might be under stress.
Okay. How do you determine the appropriate walk forward optimization versus a testing period, i.e. 30-day optimization, 15-day testing, etc.?
That's a very good question. Optimization, over-optimization, curve fitting, all these terms that I really didn't get into today are, why don't you just, if you can grab that person, and I would be happy to give a more detailed answer about that, because it's more thoughtful than I can actually get into today. It's a really, really important concept, because again, the optimization, curve fitting, recalibration, a lot of those specific things that are really important to strategy development is not something I covered today, so I don't want to really just provide a tertiary, high-level answer. So I'll answer that offline.
Okay. NinjaTrader offers free historical data. Is this okay to use, or should I buy my own data?
No, I think NinjaTrader historical data is fine. I think you're fine with the historical data. I can't speak to how good it is for some more thinly traded instruments, but I think most people are focused on the bigger, more liquid contracts, in which the free historical data should probably be fine. If it's one of those mini contracts, is what I call them, like I can't even remember them offhand, but not the CL contract, but the QCL, or maybe a more thinly traded currency futures, you might want to stick away from those on free data. But if you're talking about the S&P or any or gold or something like that, I think you're fine. Certainly fine with the notes. I mean, those are so liquid that you're going to have really accurate, good backtesting data from NinjaTrader.
Okay. Do you factor aspects of order flow into your strategies?
I personally do not. I know there's a lot of good order flow traders out there. There's order flow vendors, Jigsaw and some others that I know are pretty popular. I'm sure, Terry, you guys may have done some work with them. I personally don't. I also don't deal with as much volume. There's been a big debate in the world these days as to how important volume is. I think that volume in the futures markets is a little bit more pure read than it is maybe even in the stock market now, as crazy as that sounds, because in the stock market you've just seen so much move over to the derivative side of the platform that just because you're seeing a big spike or turnover in volume on a security on a particular day, while that has some meaning, I don't think it has the same meaning as it might in the past, because now there's various other ways of expressing that same trade. And then, of course, indexing and ETFs have also affected that too. So the volume of the individual equities is affected by the indices that they're in, whereas on the futures markets, I think volume is a little bit more worthwhile if your strategies are based on something like market profile.
Okay. Is there any intraday trading strategies that you've seen on C2, or are they more geared towards swing trading?
Great question. There are, but I would say that the velocity or frequency of those trades, even if they are intraday, meaning that they're closed or flat by the end of the future session, they're not as frequent as what I would typically think of someone who is day trading, who might be have a strategy or signal logic that's generating a wide amount of trades during the day. So for futures, it's actually pretty evenly split. A lot of the strategies choose to go flat just because they know that those are more comfortable for investors to follow, even if investor accounts are large enough to sustain the maintenance margin, which almost all are. It doesn't necessarily mean that they want that kind of exposure. So it's kind of a mixed bag. So less is more in terms of the amount of trades. Whether the strategy is flat or not is not probably as big of an issue.
Okay. Let's see. So I'd like to code onto a coded indicator. Would SharkHound handle this? I use ES Mini on NT8 and have ran into problems.
If I understand the question, I think you can use any custom indicator as an input on Bloodhound. So if you code up your Rod's special badass moving average, now that in of itself has to be coded in an indicator that Ninja can read, and an indicator that then in turn Bloodhound can read. But if as long as it's running as an indicator on Ninja, then you can associate it with any of the logic when you're building a Bloodhound template. I think that might have answered the question. So yes, you can use custom indicators in Bloodhound.
Okay. And then since we're at time, I'm going to make this the last question. What is the main performance metric you consider before going to forward testing? For instance, I'm looking for a $3,000 drawdown intraday system. Have you seen this before?
It would be very difficult for me to say, which candidates you want to pull from back testing into forward testing. That's probably a bigger conversation that we could go into today. I spent some time at a really high level just sort of explaining that, again, this is what's worked for me, and I'm fortunate in the sense that I can just beat myself up and be in front of these machines for longer than is probably healthy. But I just kind of knew the targets and areas that I wanted to start with, and then I was back testing far fewer candidates than I see some people starting, so it was easier for those forward testing candidates to kind of more naturally and organically emerge. Now again, if you listen to some of the Top Trader podcasts, there are some more technical guys than me that start by throwing a lot of spaghetti at the wall, run thousands and thousands of back tests and emerge with 200 or 300 candidates, and then take those 300 and whittle them down to 20 and then walk forward 20. I'm just not that good. I can't even deal with that much data. So it's kind of a long-winded way of saying that, the faster you can get to just a few candidates that you're going to use for walk forward testing, the better.
Okay, perfect. Thank you very much. Thank you for the webinar today, for spending some time this afternoon, and thank you very much. We appreciate it.
Thanks, everybody. Thank you, Terry. I appreciate your time.
Absolutely.